Hey, good morning, everybody. Welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and as always, we have the one and only Nilabh with us. He joins us every Tuesday. He's one of the co-founders of MRKT AI. It's the fundamental research terminal that we are going to be using. It stands for Market Research Knowledge Terminal. It's everything you might need to know about fundamentals or what's really moving markets. So guys, hit that like and subscribe button because Market in the Morning starts right now. Yo, Nilabh, good morning, man. Good morning.
Good morning, Kevin. How's it going?
Dude, it's doing good, bro. I'm doing good. How are you doing? Happy
Good,
Tuesday.
man. Sorry?
Happy Tuesday.
Happy Tuesday. Wow. I love what you said. He's always here on Tuesdays.
Always. No pressure.
I'll take first. I'm not always here, but I try to be. It's always a good time when we join on Tuesdays, go over the markets.
Yep.
It's early on in the week. There's a lot going on this week. So much to go over. Countless data, US data that's going to come out starting tomorrow.
Yeah.
So we'll definitely prep for that. It's still early on in the week. So if you have made some money in the market, make sure you pay yourself a little earlier this week, just because it's going to be a very volatile week. And you don't want to give up any profits that you earned by being patient, by being disciplined and executing in the markets, right?
Yep.
So should we get started?
Dude,
should we go into
it.
some of the analysis, look at some of the markets? What I have open here, you know what? We'll start right over here on my baby gold, right? Gold, as we know, has been so bullish for the past 2 years. And it seems like the world is now just waking up to why gold has been on such a massive bull run, like a historical. Gold has not rallied like this since the dawn of time. This has never happened on gold. And there's so many factors that play into it. Number one, geopolitical instability, right? You can tell that whenever there is heightened geopolitical instability, gold, and other safe havens will rally. So for the past 2 years, there has been so much that's been going on in the Middle East, right? With now more geopolitical tension, with trade wars that started again last year. We had more geopolitical tensions in Greenland, in Venezuela. We had markets pricing in Fed rate cutbacks. All of these factors, all they do is add to further buyers coming in on gold, right? Gold is a safe haven. It performs well in a lower rate environment. It performs well when there's instability in the world, when there's fear, uncertainty, and doubt. So that's why when things like this happen, you can see that gold holds steady above 5,000 on Fed dovish mirroring comments ahead of US data. Okay, so this is what I mean is that it doesn't take a lot to change those rate cut probabilities that we were talking about. Remember, markets 2 weeks ago were pricing in one rate cut in 2026. Markets right now are pricing in more than two. All it took was one set of data to come out. All it took was a few comments from a Fed official to completely change back the narrative. And that is exactly when we had buyers jump back in on gold last Thursday evening during Asian session. So Friday Asian session, but Thursday evening, if you're in the Eastern Standard Time, that's when buyers jumped right back into gold and drove markets from 46.74 USD an ounce all the way back up to highs at 50.60. Not highs, but these intraday highs that we had. So this is what Kevin and I have always talked about, is that those rate cut probabilities are so sensitive and they're very data dependent, right? If CPI tomorrow or CPI on Friday was to come out cooler than expected, what do you think is going to happen to rate cut expectation? Rate cut expectations are going to jump because CPI is coming down. Markets are going to start pricing in that the Fed is going to cut rates sooner than they anticipated in June, because the June rate cut odds are now at like 8, like they jumped to 80% on Thursday, right? They've come down since then, but they're still elevated. Markets are still pricing in that the Fed is going to cut rates. So it's really exciting to see all of this play out as we speak about it. It's like we talk about it and then it happens. So you know what I mean? So it's pretty cool. When we look at gold over here, we're still very bullish, right? We have a pullback area of 5,000. So this allows us to say, okay, if market does go down to 5,000, we can potentially look for some intraday buys that could come up, right? And then our our intraday upside target is 5,100. 5,100 is a very, very clean target that will go and fill this range. But you have to keep in mind that we could get a deeper pullback, in an area that I would happily be looking to take buys is like 4,900 area, 49.50. So this 49.40s over here. These two areas are also great if 5,000 and or 59.75s don't hold, right? Same as these buyers that stepped in during Asian session on market open on Sunday. This was a fantastic move to ride into these new highs and fill this range to the left over here. And then we had a bit of a correction during Asian session. This is what I mean is that when gold is in it, when gold has its safe haven appeal, you should never go against it. You see right at market open when you get these massive candles dropping. These are not average moves. If you were telling me about these moves 4 months ago, I would have been shocked that gold is moving $70 in 3 minutes. Do you know how crazy that is? Gold is moving more than 1% in 3 minutes. That has never happened in through the test of time. So, but the important thing is that when something like this happens and you see the market approaching the price level the price level that you were patiently waiting for, where there was previous buyers that jumped in and drove the price to 50.78, it is your duty and your responsibility to be able to execute on your plan and be able to take these buys if that's what you're looking for. That's exactly what I did. Markets came down. I entered buys right at this 1 minute candle at 5,000 because the bias, the pullback target, and the target level were all bullish. And we can clearly see over here with these factors, right? Fed Mirren came out, said rates should be much lower, right? He also flags job market stress. So let's have a look at that. Let's go to some high impact headlines and we can scroll our way down because this didn't happen too long ago. Here it is. Fed Mirren. We are seeing some signs of stress in the job market, right? Fed Governor Mirren signaling job market stress ahead of key data increases rate cut odds, boosting equities and bonds, right? And then it puts pressure on the dollar. Underlying inflation is near where it should be. We don't have a big inflation problem. Boom, there's Mirren. There's dovish Mirren coming in saying, hey, we can cut rates, guys. Let's put some money in this system. Let's inject some money. There is no 100% central bank independence. So again, like he's just going Trump route, attacking central bank independence. Right. So all of these things, like that's what I mean. It takes a few comments to completely shift the rate cut narrative and for buyers to jump right back in, even on equities. When did buyers jump back in on equities? Wow, would you look at that Thursday evening when the headline came out saying that rate cut odds are being priced in at 80% for June, and the markets completely rallied. This is an intraday rally. We are sitting right below all-time highs on ES. This is the power of knowing macroeconomics, geopolitics, and being in tune with the market. You can't just look at charts and tell me you have an idea of what's going on. I can zoom into here, or better yet, I can take y'all all the way back here. Let's go here on ES. If I zoom out a bit, if I take you all here, 99% of people who call themselves day traders cannot tell me what happened in here. And I can tell you candle by candle exactly what Trump said in this candle over here. Trump in this candle said, hey guys, every country wants to work out a deal with us. China deal is looking great. And the markets rallied. This is what I mean. The markets are so sensitive to any information and they use it as an excuse to rally or to drive price to a better area for them to buy in at. 4,800 was such a massive price on ES and S&P, and that's all it took. This was a very calculated move. If you know how Trump works, you know he's going to come out swinging the bat. He's going to say, we're going to impose 200% tariffs, and then boom, now every country has to work down from there. Rather than saying, hey, 5% tariffs, and now they can work down from 5%. What's better? I'm going to Kevin, if I was selling you market and I'm like, hey, this is a lifetime subscription value of $17,000. You're going to be like, Nilabh, that's a lot of money. And then I'm going to sell you on it. Then I'm like, okay, Kevin, you know what? I'll give it to you for $7,000, $10,000 off. Unbeatable deal. You'll never get it again. You'd be stupid to turn it down. You'd be like, Nilabh, okay, done. Here's the wire transfer, right? It's business. It's negotiation 101. So you have to know the president's psychology in order to trade these markets. You know that when he says we are going to impose 100% tariffs, that's not going to happen. They're going to negotiate. It's a threat, but you gotta play ball, right?
Yeah.
So just coming back to where we are right now, gold is pushing towards the upside again. As you're mentioning, this key level is holding, and we can easily make our way into the upside of 50.80. Once market, and I think this New York session, we can easily get a push into 50.80. Once we get a break and push above this, 5100 will be met. 5100 is a very important price handle because it is the previous high over here before we dig deeper into 5150 and 5200. So this is something that if we continue, gold has shifted back into that higher highs and higher low structure on the intraday. So once we break above this, you can see we can most likely replicate a move towards the upside, similar to over here. And you can see how it's cleaner on the downside as well. That price ends up traveling in a pretty clean range from 5100 to 5250, right? And then just like here, we had a bunch of retests above this area before we dove further into 5600. Of course, that is still the target for the higher time frame, right? If we look at it, you can still see we are right at that target where it's a bigger range from 5,500 basically to 5,600, but that is still our higher time frame target.
Yep.
Right.
Nilabh, we just got some headlines coming in. Some economic data came in. We had retail sales. We also had employment cost index beating expectations, which does help support more rate cuts.
Yep.
Now, not as big as a report like we're going to get unemployment and non-farm payroll tomorrow, which, guys, make sure you're here tomorrow. I'm going to be hosting an additional episode of Market in the Morning tomorrow to cover unemployment and non-farm payroll. That's
how Kevin, I'll also be joining you if you'd have me.
Yeah, dude, of course.
We can do an amazing NFP session.
Yes, sir.
And break down and actually call out some trades for when labor market data is released.
Let's do it.
That will be very, very exciting.
Awesome.
So yeah, we did have those headlines that Kevin mentioned, where you can see misconsensus signaling softer wage pressures and boosting Fed rate cut expectations. Boom. And then we also had retail sales data here, U.S. retail sales, ex-automobile. And also, there's a very important update that we have coming out. I'm very, very excited for it, where once data is released, you will be able to see the entire playbook come in right into the newsfeed. And Kevin knows a lot of this because he gets behind the scenes access to everything. But even some things like over here, if I go back to the chart and I click this, I know you guys don't have it right now, but this is something we're working on. There's something we're testing internally before we release it to all our users, is that we're able to paint a story of every time this factor has played into it, right? Like softer U.S. data, like employment beats consensus, reinforces Mirren's rate cut view. You know, so it's very cool that we're able to pinpoint fresh rally. Fed's dovish stance provides steady support for higher gold prices, and boom, we got higher gold prices, guys. This type of tech has never been built before, and I put my money on the line. I mentioned last time, if somebody could find me a platform like this, I will happily wire transfer you, PayPal you, send you crypto, 1,000, 5,000. You guys can't do it because we are innovating in this space. This is the most innovative platform since TradingView. And I've heard this countlessly over the past few months, and everybody knows this, and we're only getting better and better. So you can see we have, again, rejected the same lows that we were previously rejecting in Asian session and in like Tokyo and China sessions yesterday. So now if we can push above here, above this area where we previously had some problems getting back above, we can make our way back to 50.80. So we'll be watching lower time frame price action, how we get over here. But in the meantime, we can look at ES. I'm not gonna lie, Kevin, this kind of looks like a barcode.
Bro, it's just up and down, up and down.
I am not a big fan of when price action looks like this, but again, markets are still bullish. Like we know ES is still bullish. The same factors that are playing in on gold are also putting emphasis on ES as well, right? Markets move the same. Every market moves the same. BTC, gold, ES, all these factors, these macroeconomic factors apply to every asset class, whether you trade commodities, whether you trade stocks, whether you trade crypto, whether you trade currencies, bonds, it doesn't matter. If you don't understand what's actually driving the market that you trade, well, you're going to be trading blind. And that's the last thing you want to do when there's money on the line, right? Treat it like an actual business. Don't stop coming to the markets and treating it like it's a gambling. Like these aren't your accounts. your funded accounts or your personal, they're not to gamble. Like you actually have to treat it like an absolute business and be aware of it. This is one of the situations where, you know how people always say ignorance is bliss? It is one of my, I absolutely hate that saying. Like to me, it's like you are choosing to be blind and not hear the truth, right? And that applies very hard in the markets when someone says, "Oh, I don't need fundamental. I don't need to know what's going on." Buddy, you're trading the financial markets. What about the finance side of things? It's not just these green and red candles on a chart that are going to tell you what's going to happen next, right? If I was to just show you this, Kevin, and I told you, "Okay, Kevin, tell me, are we going up or down?" And that's all you knew, what would you say? You would have no idea.
No
But
clue.
when you know the story behind it, you're like, "Oh yeah, we're heading towards the upside on gold. We're heading towards upside on ES because of all this stuff that's going on." And now I can be like, "Okay, maybe I'll try buying here. Maybe I'll try buying here. I'm not going to sell because I'm not going to short it because we're not selling off anywhere, right?"
Yep.
So, yeah, just to get back to this, gold is currently, as we mentioned, reacting to these highs. But I do think we'll get a break above here. Like once we do get this break above this minor lower time frame area of price activity, then we can easily get buys towards like at least 75 and 80, and
Yeah.
then obviously final target of 5100. What do you think, Kevin?
Yeah, I like that. I like that. Good setup there. You're not looking for an extended move. We're just looking to trade the range, get out at the highs, enter the lows. That's the goal with trading, right? When we know markets range 80% of the time, we want to be able to take advantage of that and at least know which direction we're headed in because of the fundamentals. If we're bullish, more overall bullish fundamental, and we see yet we're still a bit range bound, well, then guess what? Instead of trying to short the highs with bullish fundamentals, we're going to buy the lows.
Buy the lows, exactly. And that's
Yep.
exactly when you look at something like this move down towards the downside, 50-20. You see the previous times we've rejected this during Asian session. We tried to rally, buyers tried to bring markets up. We couldn't make it past this. We came back down. This is a perfect area for someone to be like, "Okay, if we start rejecting this, I'm going to look for a buy." Or if we go a bit deeper into 5,000, I'm going to look for a buy if I see a bit more rejection of this price point over here. So again, we're in this range over here, right? And it's not the most ideal range. So better entries are always towards the downside, like as in like
Yeah.
trying to buy here or buy at 5,000 down here, because now you have much more potential towards the upside versus somebody randomly buying at this level. Now, where are you going to put your stop loss? Down here? Where's your take profit? Up here? That is a horrible risk reward ratio. Like you are operating in negative risk reward. That's like me saying, "Okay, I'm going to risk 3 bananas and I only want half a banana back." That's stupid. The math isn't mathing over there, right? I want more than 5 bananas, 6 bananas. Give me 9 bananas. Give me a 1-to-3 risk reward ratio. So it's the same principle. It's so you have to operate with positive expectancy, with a positive risk reward ratio. So right now it's 9 minutes past the 30-minute candle open. We're still seeing great movement
Yep.
on gold. I do think gold is going to break towards the upside over here, whether it be in the next hour or 2 hours, right? And then we can continue tomorrow.
Awesome. We got a question from Welcome. How come we are seeing bearish moves in USD JPY intraday? Is this due to future rate hikes or just price setups? And we'll take a look at that, and then we're going to dive into the S&P. I want to show you guys something I noticed with
You
market.
want to share your screen?
Let's cover, if you want to do yours, we'll cover
Sure.
the USD JPY first, and then I'll share mine.
Yeah. Let's open up UJ. I haven't looked at USD JPY in a long time. So we'll open up UJ.
And what's cool, it's funny, something I pointed out on the last show was I was covering some futures, some different Forex that I don't trade myself, but market just makes it so easy to understand what's going on that you really don't need that extra experience, all of that research. It's right here.
Yeah, right? It's just quick. Like you can just quickly check what happens. USD JPY drifts to 155.19 as Fed dovish mirror remarks. Intervention warnings persist, right? So you can see we had a bunch of data miss. We had Fed rate cut odds rising, June rate cut now priced at 80%. All of this adding towards the outflows on USD JPY and also potential upcoming yen, Japan rate hikes, right? Bank of Japan rate hikes. So those will also be playing in a role to the increasing yen strength. And at the same time, we have intervention threats. You know how the Ministry of Finance will always intervene to prop up the yen short term when yen is experiencing a major downside. Currently, we don't really have to worry about those threats immediately because two things are needed: yen decreasing heavily in value in the intraday timeframes, as well as dollar increasing rapidly. When you get a combination of these, you will often see the Ministry of Finance step in and prop up the yen in the short term. Well, they'll buy billions of dollars of Japanese yen in the immediate time just to prop it up. But it always gets faded out because the yen is just on a massive decades long downfall because of the monetary policy.
Yeah. Awesome. Great stuff, man. Appreciate you for covering that.
Of course.
I'm going to pull up my chart. I'm going to show you guys something that's going on with the S&P 500 at the moment. Now, like Nilabh mentioned, this is the price action we're getting right now on ES. We're just getting barcode. We're getting up and down. We're going nowhere fast. It's been in a 10-week range, but in all reality, right, we are still in a bit of a bullish market. We are still near all-time highs. We have bullish fundamentals, and now we're switching a bit more dovish again from a more hawkish stance. And what I wanted to point out, guys, was how reactive the market is. When we come down to one of these moves to the downside and we just click any downward candle over here, it's going to tell us because of some type of fundamental bringing us lower, whether it's geopolitical tariff tensions, right? Markets react so quickly to tariff uncertainty, right? When you hear tariffs, don't think, oh, tariffs, this is nonsense. Think trade deal. Just like Nilabh said, right? It's the art of the deal. When there's a tariff, there's a new tariff tension. There's a deal about to be made. Markets are going to react poorly at first, but at some point there is going to be that turnaround. If we've learned anything in this past year or two, it's that there's all these big announcements of all these crazy new tariffs, and then boom, a deal is made and markets skyrocket off of that optimism.
Yeah, and sometimes it happens the day after where Trump will come out and be like, hey, 700% tariffs. And then 2 days later, he's like, guys, we worked it out. It's deal's done. 10% tariffs.
Yeah. Seriously, guy, I'm going to new 50% tariff on Canada. Never mind.
We talked it out. It's good.
We talked about it. And then here, ready? We're going to click any candle moving up. It's going to give us the same situation. Risk on sentiment, pre-market momentum. Let's see, dollar sell-off. This one, any big headlines? Gold prices slip. U.S. jobs data. This was U.S. jobs data, but really great. And again, what I love, one of my favorite updates we've had recently was the annotations. Those were phenomenal.
I'm a big fan of it because last week there was 2 days where I just didn't look at the charts, just super busy, like heads down market work. I opened up gold and I'm like, okay, like it was when gold was just retracing. I'm like, okay, what's going on here? And it's very easy to just gauge it and just quickly understand and see the story behind it.
Yeah.
So gold is actually making its way back, and I think we're gonna get that break before, maybe even before the new 4-hour candle opens at 9 a.m. Eastern, and then we also have New York Stock Exchange open in about 45 minutes. So that will also be. We'll see how markets have developed by then.
You know what's funny? Your 4-hour time frame closes at 9 a.m. right, Eastern?
Yes, on CFDs. Yours is 10.
Yeah, on TradingView is 10.
On futures, right? Because of the 1 hour.
Oh yeah, because of the 1 hour close. Yep.
I think what is it? Futures opens at 7 p.m.
6 p.m. Eastern. So closes at 5 p.m. opens at 6.
Yeah. Same with the CFD. I wonder why yours is. Let's see why. Maybe they just make up for it.
Yeah, first 4 hours at 6 p.m., then 10, then 2, then 6.
Yeah,
then
I see it. Yeah, makes sense. 6.
Where's your start?
Yeah, 6 p.m.
What? Some math isn't mathing here.
Some math is not mathing here. There's something up with this one. Guys, we'll get back to you on this. We'll get back to why TradingView is not showing the right time here.
Something
That's
market would
funny.
never have an issue with.
We would, guys, we would never have it. We're very calculated. I would love for this gold buys to actually extend out this time. I've been in this position for since 14 hours, for almost 15 hours now, and I am kind of tired of holding. But sometimes the market isn't always going to move when you want it to move, and that's, I think, that's always an important lesson. Is that always sometimes we'll get the cleanest moves towards the upside. It'll be very easy money, like you'll make like a few $1,000s in a few hours, and you're like, wow, that's great. You're feeling on top of the world, and then sometimes the markets will humble you. You'll be down 5 grand in a day, and then so it's like you always have to be grateful for however you're performing. It's like if you're in a little bit of a downfall, take some time, reflect,
Yep.
get back in the market, size a bit lower for your next trade, just so you can grab those easy wins. That's what I found works best for me, is that if I'm ever in like a in let's say I've lost 3 trades in a row, right? I'm still in my risk parameter, but I've lost 3 trades in a row. I'm feeling a bit off. You know what? Let me size a bit lower, start collecting these easy wins, build that confidence back up, and boom, next thing you know, you have a 10K day. Like, it's just, all we have to do is just be very patient. Like, I've been in this for almost 15 hours. Was I expecting it to take 15 hours? No, I thought that by the time I go to sleep, I would have taken profit. I thought we would have filled this range because of just how gold has been moving. We would have filled it and we would have back up here. 15 hours later, we still haven't made it past above this level. So of course, it's like markets will move how the markets move. There's no certainty in the markets. It is all a game of probabilities, right? If I'm looking at price down here, I'm going to go to the, I didn't want to go to this replay, but we'll go to, oh, see, now we're getting that, we're going to get this break, I think. If we don't, again, even if we continue down like a bit, reject this, I still think we're going to get this in this session. We're going to break above here. And then the next target you have are your 70s and 80s. And that's where I will look to close majority of my position that I have open. So as I was mentioning, like even when you're down here, let's go right down here. To a majority people, they would be afraid. They're like, okay, I don't want to buy right now because there's no signs of buyers coming in. Me, I'm like, there's been buyers here before. Gold is bullish. Let me buy. And then buyers jump in. This is where you have to act on intuition. Markets are all powered by intuition. Sorry, did you want to say something?
Yeah, no, you know what? If you want to rewind a little bit there, when price rebounded off that point, something to point out too is if you're nervous to sort of buy those lows, you don't have to buy it while we're selling off, right? Don't catch that falling knife.
Yep. Great point. Great point. You can wait for those confirmations, right?
Yep.
Absolutely wait for those confirmations. Any tips to master pullback targets? I'm a breakout trader and not catching bigger pips. Yeah. So again, like I want you to keep in mind that you can buy the breakout. You can 100% buy the breakout, be profitable, but your probability of that playing out for a larger range are lower, because if I buy over here, the probability that the market will head back up to 50, 55 at bare minimum is very high, versus if I buy at 50, 40 and I'm expecting it to push up to 50, 55, you have a lower probability. And that's just because of the price range. You are very close to that price handle. Does that make sense? Now, if I try to buy the break above this, yes, with clean volume and volatility in the right conditions, we can easily go straight to our target. But what if something like this happens? You see a break above, you see a nice retracement, we go back down here and then push up. Is this wrong? It's not wrong. Markets are always right. They're irrational. That's what you have to keep in mind. They're irrational. Sometimes it's when you see price approaching a pullback level, let's say 5,000, or be it like any of these areas where we highlighted previous buyers stepped in, you have to go into the lower time frames and see how price is reacting. You have to be more proactive in this case rather than reactive. And this is where the paradox is. You have to watch how the markets react and then position yourself, right? Sometimes, as Kevin mentioned, when you try to catch that falling knife, you're going to get burned. There's only so many times you can catch a falling knife before it leaves a hole in your hand, and now you need stitches. So
that's a good way to put it.
Exactly. So when you approach a pullback level, go into the lower time frame, Watch how price is reacting. You see initial buyers jump in, boom, double bottom, and boom, now we have a play towards the upside. Now I'm positioned in from here rather than trying to look for buys from above here, which I'm not saying aren't incorrect, because once we break above here, we're going to push right to 50.75. But the odds of your buys playing out cleanly with the least amount of distress, because that's what the markets cause. Markets cause people stress, right? It's money on the line, especially when you're playing at, when you're risking like 2,000, 3,000, like there's risk, or regardless, even if you're risking $200 a trade, it's still hard-earned money that you're putting on the line. And this is what separates us from everybody else. We're natural risk takers. We come to the market inherently, we're like, okay, I want to take a risk because I know it could pay off. But I only want to take the risks where I have a higher probability of it playing off.
Right. Yeah, great. Guys, got to remember, as traders, we're not just traders, we're not just buying and selling, we're risk managers. We got to know, okay, if I take this trade, am I okay taking a loss here? If you take a trade and you know, okay, if this hits stop loss, my account's blown, it's too much of a loss, you're probably sizing up, right? And you probably need to size down. Trading should not be stressful. Trading should be something we can come back to every day, get our fundamentals from market, do our technicals, whether we do it with Nilabh or Jeev or whoever. Just do your thing. Don't stress. Trade the range.
Yeah, exactly. Trade the range. Look at these high probability setups. Pay attention to key price points, and just don't rush things. Like there's no one saying you have to be in a buy right now in gold. No one's saying that. Look for the next opportunity. There's opportunities every single day. I see like 5 to 6 opportunities to trade gold every single day. You don't have to take every single one, because then you're just going to fry your brain staring at the 1 minute price action for 24 hours a day. We've all been there. We've all been there in our office, just going psychotic, looking at numbers on the charts, being up and down in P&L, you know what I mean? Floating a few thousand, being at break even. Like, it's just, the markets can get exhausting. This is why you have a few winning trades, take some time off, enjoy time with your family, go out with your girlfriend, take her to a nice dinner, and enjoy the profits, right? Yeah. But the main thing is you take them. The money isn't real until it hits your bank account. And that's what most people do, is that they run up account and they never take it out. And then you go on a tilt and you've just lost a ton of money.
Yeah. That's, you make a great point there, guys. Trading, right? We also have to think too, just like fundamentals change, market analysis, technicals, those are always rotating too. There's something called market structure. And I'm not talking the ICT market structure BS. I'm talking about actual market structure between range-bound price action, bullish trends, bearish trends. Markets are always changing, and those fundamentals give us that insight. So when you see markets are in your favor and you're taking a win after win, great. Let yourself profit nice, maybe even 25% the risk on those trades if you're in a good trend and a good market condition, because things are going to shift. And when things shift, you don't want to be heavy in that risk again. You want to be patient, take a loss or two and say, okay, that's fine. I just took a red day, but it didn't even dent the past 2 weeks of profits I had.
Yeah, exactly. Could not have said it better myself. So even now, let's look at some long-term plays. Exactly what Kevin was mentioning. Market structure changes, right? Markets change, but it's always better to be an optimist. Like, we had massive outflows from Robinhood over the past few days. Robinhood is a stock that I bought at about 31.56, like this price point here on April 7th, when Trump was right coming out banging with the tariffs. I dumped money into all U.S. stocks at lows April 7th last year. And they paid a lot of returns for it. Like, Robinhood rallied from these lows about like 400%. Come on, 400% from these lows, right? So when you get an opportunity like this in a stock like Robinhood, because Robinhood, let me give you a little secret founder information. The founder of Robinhood is very innovative. He's very innovative. He's taking the company in a full tokenization route. Well, you'll be able to trade private tokenized companies that aren't available on stock exchanges like SpaceX, like OpenAI, right? They are tokenizing a lot of these things. And if you probably heard Larry Fink, the founder of BlackRock, also talk about tokenization and how it's going to be the next wave of financial market. So when you see something like this, And you're like, oh, you know what? Nothing's really changed though. Nothing's changed in the market environment. Markets are going to continue to price in these rate cut expectations. We're still very bullish. We're in a risk on environment. Why wouldn't I buy here? Especially when the upside is now nearly 100% upside back to highs. Why wouldn't I buy here? So that, yeah,
You know
Kevin.
what? I'll tell you why you shouldn't buy. Let's check market.
Let's check market. But
Check
I want
market.
to complete this point. Is that
I got you.
when we do get these changes in market structure, if the environment remains the same, don't get fooled by the markets. The markets, like Kevin and I were mentioning, they're irrational. They will try to like dupe you into being like, oh, you know what? I'm going to close my buys. Like, imagine the amount of people that started shorting because all they saw was this red price action. And that's why price action doesn't tell you a good enough story of what's actually happening. But as Kevin was saying, if like the environment doesn't change, if you're still in a risk on environment, if ES is still rallying, if NQ is still rallying, why wouldn't these individual stocks recover?
Right.
Right?
Optimism.
Don't let the markets fool you if nothing has gone wrong. And Netflix is a great example of this too.
Yeah.
Is that Netflix, nothing has changed for Netflix. Netflix revenue is the same. Netflix revenue is only increasing. Netflix as a company overall is fantastic shape. This downside move was purely because of the Warner Brothers and Paramount deal and the uncertainty around that. So Netflix also has great potential upside. I'm sorry, just to get back to gold, still under this price, Anna, but we are closing up on this new 4-hour candle and this new hourly candle. So I do think that the next one, we could literally just see a small maybe pullback and then straight like towards the upside is what I
Yeah.
would think we would see, especially because New York session buyers are in from here.
Right.
Unless we get another dip and see how we react here, right? Or maybe even and this would be for pullback buyers. If we go back to here and we get a pullback to 5,000, solid buys. Otherwise, look for when we get a break above, then we can look to ride this further towards the upside. Does that make sense?
Yeah, no, that's perfect, man. That's again, same situation where it's not like we're looking to short these highs, even though yes, markets have reacted to this resistance up here a couple times, but what have we noticed from those reactions? They are weak, they barely make it. Other than that one move that brought us down to 5,000 for Nilabh's long entry, there really wasn't any good bearish price action, and there really weren't any bearish fundamentals either. So at some point, we're going to most likely break through this resistance.
Yeah, this minor resistance to it, and then just
Yeah.
make our way back to these highs and 5,100, which I think we can get today. But we do have labor market data upcoming tomorrow, so
Yeah, that's going
we
to be
can
big.
let's quickly have a look. We have unemployment rate and non-farm payrolls, and you're like, why is this being released on a Wednesday? Because the U.S. government shutdown delayed it from being released last week. Right? These were supposed to be numbers that were released last week. Previous we had 50K, right? Minimum we're getting is a maximum minus 10K jobs created, right? So a lot, and then or 135K jobs created, with both a bank forecast and a forecast being 70,000, right?
Yeah.
So when we look at this and we're able to see here we have very bullish. Let me just turn off this little feature that I have. I don't want you guys see. So what if we get a reading above the maximum? You have a very bullish dollar, which means you'll get a pullback on gold that could potentially lead to better buy prices. I'm just going to keep this open for a second because we just had the new 4-hour candle open. So we'll see how that develops over the next few minutes. And if we get a reading below the minimum, we get a very bearish reading, a very bearish dollar. Again, looking at unemployment rate, same thing. Higher the unemployment rate, the more bearish the dollar will be, because that means Feds are going to have to cut rates ASAP. If you see unemployment rates spike up, markets are going to price in higher rate cut probabilities for the next upcoming rate decision meeting versus a lower excuse me, a lower unemployment rate will cause dollar bulls because the policy can be a bit more hawkish and keep rates for higher for longer, right? And then later on in the week, that's where one of my favorite data reports. Isn't it crazy? The traders are like, oh yeah, that's my favorite data report. It's like, buddy, it's just a number. It's just data.
Hey, non-farm payroll is my favorite.
Yeah, we just love the volatility.
Yeah,
We are all addicted to the volatility in the markets when these numbers come out. We're kind of like drug addicts. I'm addicted to the market volatility. I love it when conditions are on fire. Like when things are going off around the world and all this instability. Yes, it's bad, but I'm not emotionally attached to any of this. I'm here for my job, which is to make money in the markets and make it in the most efficient way possible. And when conditions are all lined up and everything is moving with great ease and volatility, why wouldn't I take advantage of things in that time frame?
you have to.
You have to. So here's US CPI, which is the inflation reading. We can open up the year over year reading. Prior was 2.7. We're expecting a cooling of 2.5. Okay. Minimum being 2.3, maximum being 2.0 over here. So if we get higher than maximum, you'll see we will get a very bullish dollar, right? Because that's excuse me. And below 2.3, a very bearish dollar because that prices in again those rate cut expectations increasing. So not much going on here. Gold is still below here. And nothing's really changed on intraday. Markets are just moving a bit slower this week. We've been in the same range since market open.
Yeah, really not getting much. We need some type of catalyst to get us moving. And unfortunately, we might not get that till tomorrow.
Yeah, we might not get it till tomorrow, but I do think that we can still make our way up here. It's just a matter of when, and it's just a matter of if we go deeper, pull back a bit deeper to get better prices. But I am still very hopeful that 5,100 is looking like a solid target towards the upside for us.
Absolutely. Looks great. Guys, that was today's episode of Market in the Morning. Nilabh, did you have anything to leave us off on?
Only thing I'd leave you guys off on is stay tuned. We are finishing our last round of testing our new updates. There's going to be a lot of changes coming to market as a product, as a company. We are going to be introducing tiered pricing for users who want more, better, deeper, more powerful features, which will be coming up in the next few months. We also have some things lined up for our loyal users, our users who have been here with us since day one and have supported us from when we were just a baby, right? When we were a baby. Now market's all grown up. Excuse me. There's over 20 people working on market every single day, full time. Kevin being one of them, myself being another person. But we are actively, like the amount of times Kevin always points out, this is how we can improve things. This is where we can make things. That's what I love, is that market is being built and used by actual day traders. There is no other company in the excuse me. There's no other company in the trading industry where everybody, every employee, everybody on the team is a day trader and trades the financial markets every single day. That's why this platform improves so fast, because it is built by day traders. It is built by people who actually rely on the markets to make money for their bread and butter, to put food on their family's table. It's made by people who have countless years, a decade experience plus of trading the financial markets. And that's where we just stay winning. Thank you so much, Eric. Appreciate that, man.
Absolutely. Yeah, guys, don't forget to join us tomorrow for Market in the Morning as well, to cover non-farm payroll and unemployment. It's going to be a great episode. And we're probably going to find some live trades as well. So make sure you guys join that.
Stay tuned, and we'll completely break down U.S. labor market data and call out those trades.
That's awesome. Nilabh, thank you so much for being here today.
Of course, my friend.
Absolutely. Guys, have a great rest of your day. Hit that like and subscribe button, and we will see you guys tomorrow. Take care and happy trading.